Welcome back, everyone, to this series all about gold, which I began last week at the request of one of the viewers, and I have now gotten to the point where I am going to today talk about one of my favorite gold stocks. So before I get into the specifics, just a quick note. Um, I'm not going to talk about what I believe this stock to be worth because I think that question is quite complicated. I look at relative to other gold stocks, but anyway, I am not going to use discount rate. And while I am long this stock, it is risky, and thus it is carefully sized within the hedge part of my portfolio. And I also want to say it's not the cheapest, it's not the safest, and it's not the best or the potential best for its type of play. So when looking at this type of stock, the three things that I like to check, and you kind of need a bit of all of them because otherwise you're likely to get burnt here or there. But anyway, I look for management, I look for good assets, whatever, and I look for margin of error because none of these are going to be helpful if you're paying too much or if you're not getting a good asset or you're getting bad management or whatever. So anyway, three things that I watch. So in my opinion, Equinox Gold is the one gold stock to own if you're only going to own one gold miner, which again, I don't recommend, but if you were, I think it would be Equinox Gold. Um, and who might want to own this? Well, if you think there's value in gold or if you're looking for value in gold miners, this is a decent play. It is a developer and a producer, and I would rate the risk at about 5 out of 10 within the sector. There's a great number of factors. Um, it has most of its mines have decent all-in sustaining cost. It has one producing mine right now that is the highest cost of the three. It has one under construction, will be finished soon, and a third in development. So this company stands today with a market cap in US dollars of just over 360 million, which makes the 13% insider ownership pretty impressive, although 12% of that is the chair of the board. Now, so what is Equinox trying to do? Well, they want to have 4 to 6 mines and produce over 500,000 ounces. Simple enough. Recently, they bought the Mesquite mine for I think it was 140 million, and it produces 135,000 ounces a year. They're building up Arizona, which is they need to complete that, but they're more than 90% done. And then they build up Castle Mountain in 2 stages, meaning they have 3, buy 1 to 3 more, or develop their project. I don't think they do that, but a few more mines, and there you have it. Now, the interesting thing is they have currently assets in those 3 mines to potentially have 475,000 ounces a year. 135 from Mesquite, 135 from Arizona, so that's 270. Then you add phase 1 of Castle Mountain, that's another 45. And then in phase 2 of Castle Mountain, they get to 200K, 200 plus 170, 175. It's 205 actually, but that gives you 475,000 ounces out of their current assets. Now, some of the risks that are associated with this company are first, their one producing mine currently, Mesquite, has a higher all-in sustaining cost of about $900 an ounce over the last 10 years of its life. So if it goes below that, the company is going to be losing money. Second, it has some significant, well, fairly decent amount of debt that comes from A, buying Mesquite, and B, building up Arizona. And next risk is, although it does have 2 or 3 projects, that's pretty undiversified. So one hit on one of them, one problem, one place could be pretty crippling. And lastly, financing or purchases could be an additional risk because when they purchased Mesquite, they financed it with shares sold decently below the market, which caused the share price to get hit by about 10%, if I remember correctly. So all of those are potential risks. Next, I want to talk about the upside limits of this company. Um, their only project that they have that I didn't mention beyond the three that are part of the plan is Elk Gold, which is, I mean, it's not a lot of ounces at present. It's a past producing mine site, so I don't have too many hopes for it. And although the current mines are in some ways relatively young, have decently long mine lives ahead of them, if the price of gold increases, then their future growth would be more expensive. So in some ways, it's ideal that the price of gold stays lower longer for them. So hopefully they could build up a few assets before, hopefully the price of gold increases for them at least. Um, and also they have lower, relatively compared to the industry, compared to things of their size, lower all-in sustaining costs, which is good for now, but it also means less leverage for more earnings if the price of gold were to go up. So now I've mentioned leverage to the price of gold, and now I think I'll just show you quickly what I mean. So these are the all-in, on the left of this table is the all-in sustaining costs for the three of their mines. $900 for Mesquite, $754 for Arizona, and $763 for Castle Mountain. Meaning if the price of gold goes below that, they get into negative value. Now, the second column is the current um, earnings value of the project based on 1250 gold. So that's fine, that's decent, that's nothing in terms of what I'm going to show next about leverage. So the next column is the price of gold that it would take to double the earnings value of the projects. And so the further away the 1250 is from the initial or from the zero value, the more it takes gold to go up even more in order to increase earnings from higher gold prices. Now here is a look at the potential different cash flows, basically price of gold in excess of all-in sustaining costs at different values for gold. First we have current, then 1,000, then 1,500. As you can see, higher gold is definitely better. So now we get into basically the biggest reason why I own it. Forget about management, which are, in my opinion, quite good. But if you look at 12, if gold stays at 1250 for, let's call it 4 more years until Castle Mountain Stage 2 gets up and running, the annual cash flow for the combined company would be 211, just over 211 million. Now, currently the market cap of the company is 390 million. I won't tell you how much a company should cost, but in my opinion, at these prices, I like Equinox. Now, to summarize without using numbers why I own this, well, it's developer, producer. I believe at current prices of gold, that is, and at current prices of the stock, it's a decent value proposition. And why would one want to continue owning it? Well, looking for a re-rating as the mines come online. They have decent near-term growth assets, and in addition to that, Ross Beatty, the legend in the industry, plus undervalued assets. I like it. So as we end this first video about a specific gold stock, I'm interested in knowing, had you heard of Equinox? Are you bullish or bearish on gold? Why is that? I don't know. What gold stocks do you like? Please let me know. Um, and until next time, enjoy and good luck in the markets.